Welcome to Most Financial and Geopolitical from a Frontier. Thank you for stopping by. I like this photograph by Sergio Estrelado standing above the clouds in the Alps. Just a vista in front of you, isn't it? It's amazing. The World Wildlife Fund, 4,000. That's how few snow leopards could be left in the wild. We need to act now to save these magnificent cats. Took me back to the leopard. Sicily is the key to Italy, as Goethe once wrote. And one novel is the key to Sicily, The Leopard, by Di Lampedusa. In the family palazzo in Palermo, Lampedusa slept in the same room in which he was born, in which he expected to die. But in 1943, an Allied bomb severely damaged the building, which was later abandoned. Although The Leopard ends in 1910, it contains a glimpse of the future. From the ceiling, the gods, reclining on gilded couches, gaze down, smiling and inexorable as a summer sky. They thought themselves eternal, but a bomb manufactured in Pittsburgh, Pennsylvania, was to prove the contrary in 1943. This is an article in the New York Times, says Lampedusa had been born into the full flowering of European civilization, only to see it eclipsed. They became prophets of the Europe that thought of itself as the hegemony, and then was superseded by the United States. On that note, here's a photograph of a leopard in the grass in the Lewa Conservancy. Jill Stein, this explains so much. There are two proposed pipelines through Syria, one supported by the US, one supported by Russia. No serious dissent is allowed, no contrarian thoughts expressed, no thinking through where the schemes might end up, unless you want to be marginalized as an Assad apologist or a Putin puppet. Eli Lake is writing, the Philippines just blew up Obama's Asia pivot. Does anyone remember President Obama's pivot to Asia? The plan was to focus diplomatic and military assets in East Asia to contain a rising China. It was one of the reasons Obama said he was shrinking the American footprint in the Middle East. Well, the pivot is failing. On Thursday, the president of the Philippines, Rodrigo Duterte, announced to an audience at the Great Hall of the People in Beijing a separation with the US. America has lost now, he said, and maybe I will also go to Russia to talk to Putin and tell him that there are three of us against the world. China, Philippines, and Russia is the only way. Two things should be said here. First, Duterte is a crude vulgarian. He has called Obama a son of a whore and picked a fight with the Pope. As a politician, he is often compared to Donald Trump. As a president, he has acted like an authoritarian, waging a paramilitary war against his nation's drug users and drug dealers. Second, Duterte's own government appears to have been kept out of the loop about this new alliance. On Friday, Duterte himself said he did not mean to imply he would cut diplomatic ties with the US, but he has not backed away from his pledge to end military cooperation with the US, though others in his government have suggested he will back down. Regardless, this is a big story. The Philippines has been an important US ally since the beginning of the Cold War. What's more, the Obama administration has invested in the country as part of its pivot to Asia. In 2014, the two countries signed an enhanced defense cooperation agreement. When the Philippines brought a case against China at The Hague over China's artificial islands in its territorial waters, the US supported the Philippines diplomatically. In July, The Hague's Permanent Court of Arbitration ruled in favor of the Philippines. This should have been an opportunity for the US to turn the screws on China. Instead, the Obama White House encouraged China and the Philippines to resolve the matter themselves after the ruling of the International Tribunal. At the end of August, Secretary of State John Kerry told reporters that the US was not interested in fanning the flames of conflict, but rather trying to encourage the parties to resolve their disputes and claims through the legal process and through diplomacy. Duterte has now taken Kerry's advice. After announcing his country's new alignment with China, Duterte signed a series of trade agreements worth $13.5 billion, along with a promise to continue bilateral negotiations over the South China Sea. After the tribunal decision, our response was to tell Duterte to tamp down tensions and talk bilaterally with China. And there was no evidence of follow-up by us in terms of our own military exercises or diplomatic initiatives to enforce the findings of the tribunal. There has been next to nothing on this. We still haven't had a freedom of navigation mission that actually challenges the Chinese artificial islands. Is it any wonder then that Duterte concluded Obama wasn't serious about defending the rule of law in the South China Sea? Close watchers of the Filipino leader could have predicted this kind of thing. So, of course, America didn't do that. It didn't even send the Navy into Filipino territorial waters claimed by China in the South China Sea after an international tribunal ruled that those waters were Filipino. Instead, the Obama administration acted as if an international law would implement itself. But it never works that way. The rule-based system Obama endorses requires a great power to defend it. And that is a very valid perspective. I've spoken severally about the pivot to Asia. In 2013, I spoke about it bearing its fangs, and it's a failure of it to bear its fangs that has probably sent Duterte scuttling into Xi Jinping's arms. And in fact, it's a very big loss to the whole pivot strategy. Abe Shinzo, of course, has been on board for a while. He spoke of Japan bearing the responsibility of fostering the confluence of the Pacific and the Indian Oceans. So we've got a very fluid situation. There are a sense that Obama blinked and that China didn't. My newest horror story. Once upon a time, there was a man named Donald Trump, and he ran for president. Some people wanted him to win. I like this photo taken from a Norwegian surveillance aircraft shows Russian aircraft carrier Admiral Kuznetsov in international waters off the coast of northern Norway on October 17. International markets AT&T wants to buy Time Warner in an $85.4 billion cash and stock deal. This is a perfect match of two companies with complementary strengths who can bring a fresh approach to how the media and communications industry works, said AT&T Chairman and CEO Randall Stephenson. Currency markets, let's have a look at those. The euro, 108.86. Dollar index 98.63. The market has a probability of a December rate hike at 68% on Friday, up from 66 a week earlier. Japanese yen, when I looked last, 103.94. Swissy 0.9945, pound 122.37. The Aussies also had a little bit of a bounce, 0.7630. Indian rupee 66.905. South Korean won 1135.65. Rial 315.04. Egyptian pound 889.68. And the rand 1396.99. Speculators, according to Holger, have trimmed their bearish pound bets by 4.1%, but still near a record. Euro dollar, that's come off lately and doesn't look that great. It looks as if it can come off a bit further, back down to parity. Chinese companies target Portuguese banks. Is an interesting story about banks in Portugal. And that has an interesting impact in Lusophone Africa as well. Chinese companies are targeting stakes in two of Portugal's leading banks as the country's financial sector undergoes a transformation aimed at clearing bad loans and boosting capital. Commodity markets, gold was last trading at $12.65 and crude oil in New York at $50.83. So we're still up at sort of elevated levels of crude, gold well below 1300. Sub-Saharan Africa, the mystery of Africa's disappearing presidents, as an article reports. Africa, President Mutharika returned to Malawi on October 16th just as he promised. Mutharika left to attend the United Nations General Assembly mid-September and just didn't come back. His cagey communications team would not divulge the leader's itinerary, sparking rumours that he died in the hilarious hashtag #BringBackMutharika. Mutharika is the latest African president to disappear without a word to his people. Communication between leaders and their constituents often grow quieter after elections. Poor public relations are a signal of the lack of accountability and transparency displayed by many African leaders. Mutharika's jaunt in New York had nothing on Cameroonian's President Paul Biya's spontaneous stays at European hotels. In 2009, his 3-week holiday in La Baule, southern France, cost $40,000 a day. Like any other worker, President Biya has a right to his vacations. That was the Information Minister Issa Chiroma Bakary said at the time. Biya has been in power since 1982, but this time one Cameroonian won't let Biya catch a break while his country suffers. In a video that is going viral on social media, an unidentified man stands outside the Intercontinental in Geneva, condemning Biya and his entourage for living in a hotel for 2 months while Cameroonians struggle to make a living back home. I've come back again to the Intercontinental to make a fuss, to ask, "What are you still doing here? What do you do every day?" The man shouted, continuing to berate Biya until hotel staff shooed him away. He staged the same protest earlier this year and vowed to return until Biya went home. I wrote about this in November 2014 when I said the existing equilibrium between the rulers and the subjects is set to be altered and a rebalancing has begun. What's clear is that a very young, very informed, very connected African youth demographic. Many characterize this as a demographic dividend, but for beautiful Blaise Compaoré turned into a demographic terminator. I'm saying this is set to alter the existing equilibrium, which of course was describing between the rulers and the subjects. The Observer's written on the Congo and the failure of democracy in Africa. 2 decades ago, the DRC was engulfed in what became known as Africa's Great War, a conflict that drew in half a dozen neighboring countries and raged for 5 years from 1998. The conflict and its aftermath cost the lives of an estimated 5.4 million people, mainly from starvation and disease. This epic disaster was largely ignored outside Africa, even though it was the developed world's insatiable demand for the DRC's mineral riches that helped to fuel it. The war was halted in part by the introduction of a new constitution and a democratic system of governance, replacing decades of Mobutu Sese Seko's brutal dictatorship. In 2006, Joseph Kabila was confirmed as DRC president by popular vote, although the fairness of the election was widely disputed. In 2011, he was re-elected again. Again, the results were hotly contested. A key factor in their acceptance was his pledge to honour the constitution and refrain from seeking a third term. DRC's next presidential election is due next month. It isn't going to happen. The shameless subversion of the democratic process was condemned by the main opposition party as a flagrant violation, saying matters are not as clear-cut as they might seem. Kabila denies he wants the delay. Analysts suggest the president thrust into office after his father was assassinated in 2001 is a frontman for the security apparatus. The opposition is fragmented and its readiness to resort to protests often leads to violence. It would be a mistake to think Africans care less about self-serving, corrupt and irresponsible politicians than Europeans or Americans. Nigeria demonstrated last year how it could be done, but South Africa, ruled since apartheid's end by a single over-powerful party, is less of a shining light. Its reported decision to renounce the International Criminal Court is another sign that too many African politicians would rather jettison democratic and legal norms than subject themselves to scrutiny and public judgment. South African oil shares up 1.85% this year. Dollar Rand Gordon is winning That's why the rand's below 14. Egyptian EGX30 is up 18.41% this year. I like this photograph of a traditional warrior holding a machete, attending the coronation of Oba of Benin, outside Benin City, Nigeria. Nigerian all shares down 3.65% this year. The Ghana Stock Exchange Composite Index down 12.38% this year. Mozambique's central bank has lifted its benchmark lending rate by 600 basis points to 23.25%, its Monetary Policy Committee said on Friday. Banking distress is spreading across Africa. We've been forecasting an African banking crisis since the beginning of this year, said Robert Besseling, a Johannesburg-based executive director at business risk consultancy ex-Africa. We're likely to see more banks fail in Nigeria. The Kenyan banking sector will have to consolidate, and Ethiopia's will have to liberalize. Angola is also struggling. Some Ghanaian banks have reported heavy losses. The other one to watch is the DRC, which has also seen some turbulence. Zimbabwe's new currency revives memories of 500 trillion % inflation. They're going to introduce so-called bond notes very soon, which are going to be pegged to parity with the dollar. Some are going to accept it, some are going to reject it, others will be frog-marched to accept since the cash crisis is worsening. There is a high probability of an emergence of a black market for US dollars, thus creating more problems for the economy. My piece over the weekend was called Consequences Intended or Unintended. It has now been about 2 months since the President assented to the interest rate capping bill. Interestingly, interest rate limits were eliminated in July 1991. The amendment to the Banking Act required lenders to peg credit costs at 400 basis points above the benchmark central bank rate and compelled banks to pay interest of a minimum of 70% of the CBR on deposits. This interest rate corridor essentially topped and tailed the banks. What is clear is that there are two calculations that need to be made when assessing the damage on banks' earnings. The first is to understand how much lending was above the cap and would have to be reduced, and the second calculation was around the floor. This is not a rocket science calculation, and SIB have provided research which shows Co-op Bank's net interest income is expected to shrink by an estimated 24.3%. They will be followed by Equity Group, whose interest earnings are set to fall 23.5%. Barclays, they're projecting a decline of 15.2%. Stanchart, 11.6%. Calculations regarding the deposit structure will also need to be factored into this to get the whole picture. Tier 2 and Tier 3 banks get squeezed harder because typically they pay up for deposits and are now unable to recoup that deposit premium because of the cap. Tier 2 and Tier 3 have been topped and tailed real good. Dr. James Mwangi spoke of turning up the lending volume. He mentioned a figure of 100 billion shillings. Joshua Oigara spoke of a sharp take-up in loans since the cap was introduced. Both are indicating the fundamental bias in favor of the big banks. They can turn up the lending volume, others can't. It's worth looking at how the share prices have performed since the 24th of August. KCB has fallen the most, 26.84%. Barclays has fallen 17.52%. Equity 15.22%. Standard Chartered 11.11%. And Co-op 6.037%. Stanchart is an outlier and the only banking stock that has served up a positive return in 2016. It's plus 15.58% on a total return basis. When you compare Stanchart's total return versus the banking index, it is even more impressive. Credit to the private sector has been slowing sharply. It last registered a 7.07% year-on-year expansion through July 2016 versus levels above 20% through July 2015. Recent moves by the CBK to steer interest rates lower were in part certainly triggered by this sharp slowdown. This is a key indicator to watch in assessing the side effects of the interest rate. Another consequence of the Act is it surely accelerates consolidation in the banking sector. The deposit flight to quality post the Imperial Bank and Dubai Bank developments, coupled with the caps and floors, have surely made consolidation all but inevitable. However, merging suboptimal balance sheets will not necessarily work. There is a requirement to infuse more equity capital. I've been wrestling with the thought of whether the authors of the bill appreciate how much they've improved the government of Kenya's position. The net consequence of the Act, preceded by the deposit flight to quality, has created an outsized demand for government of Kenya, considered risk-free on the bank's balance sheet paper. The National Treasury finds itself in a sweet spot. Demands for government paper is currently off the charts, as witnessed by the recent sale of 30 billion shillings of 15-year infrastructure bonds, which I believe is the longest maturity ever sold by the government of Kenya. The government is reconfiguring its maturity profile, previously quite lumpy, very effectively. Another noteworthy development of the stock market has been the recovery in Kenya Airways' share price, which has been entirely correlated to Michael Joseph's quick accession to the chairman's position at the airline. The share price has ramped 50% higher over 4 short weeks. There is a big job to be done at the airline, which spans cancelling all fuel hedging, proper oversight over FX and treasury, and much more. Optimizing the balance sheet needs someone real credible at the head of future negotiations, and the market is betting if anyone can, Michael can. Have a look at this written by a fellow called Haya, who I follow on Twitter, possible outcomes of the new Banking Amendment Act 2016. He's painting quite an apocalyptic outcome. KenGen's taken a 2 billion shilling tax hit after Treasury dividend arrears payment. That's a lot of people asking what happened there. There was quite a big payment to the government. Nairobi all shares down 6.8% this year. NSE 20 is down 20.72% this year. Once again, thank you for stopping by.